I'm joining you live from Augustana College, where in a few weeks, the President and Governor Drew Worsham will go head-to-head in the first televised presidential debate. An estimated 50 million Americans will tune in to listen to the two candidates speak about their plans for the future. While the President was in this position 4 years ago, Governor Drew Worsham has a lot to prove to the American public. I will be following the Worsham campaign and will be meeting with Governor Worsham one-on-one to discuss the major points that he plans to get across to the American public in his first televised debate.
Kim, Kevin, how are you? Guys, thanks for coming. All right, let's get right down to business. As you know, the big debate's coming up, and we got a few important issues we need to go over, the first of which is our proposed changes to the income tax rates. Under our proposed changes, the income tax rate for individuals with taxable income between $388,350 and $600,000 would pay an income tax rate of 40%. Individuals with taxable income over $600,000 but under $2 million would pay an income tax rate of 43%. And individuals with taxable income over $2 million would pay an income tax rate of 45%. We're making these changes for all filers, and the main point of these changes is to increase tax revenue for the government so that we can work towards balancing our budget and revitalizing the middle class.
Well, Governor, we ran some figures for you. With proposed changes, we would see an income tax revenue increase by roughly $32.5 billion. That's a 4.3% annual increase in tax revenue for the government. By creating a few more tax brackets and only increasing taxes for these income levels, this extra revenue should make a nice dent in the deficit.
All right, Kim, that's wonderful, and I'll certainly use that information to validate my plan during the upcoming debate. But as you know, I also have plans to lower the statutory corporate income tax rate. Kevin, did you happen to gather any information to substantiate my plan?
Raising taxes on the wealthy is something Democrats have been pushing for years. By lowering the statutory income tax rate on corporations, we should be able to attract a number of Republicans as well to our plan. Last year, the 10 most profitable companies in America had an effective tax rate of about 9%. In addition, it is estimated that American companies have $1.2 trillion of untaxed earnings trapped overseas in foreign domiciles. By lowering the tax rate from 35% to 20%, we believe will increase revenues for the government immensely. Also, about 5.8 million jobs will be created over the next 10 years.
We need to remind voters of the Reagan era, where similar cuts from 46% to 34% increased tax revenues by almost 60%. Investments in American businesses would increase, which would then increase the ability to employ more people and pay employees more money. This would then increase payroll tax revenue and in turn decrease the deficit.
That sounds wonderful. These changes should be something that will help us attract voters from both parties. We need to remember that all of our moves are going to be under the political microscope, so we need to be ready for any circumstance or argument thrown at us. If we can, let's go ahead and look at some counter-arguments right now.
Mr. Governor?
Mr. Ray, how are you?
Good.
Good.
How can your camp justify lowering the corporate income tax rate when middle-class Americans are being crushed by the current tax code?
Well, I plan to use the lower corporate income tax rate as a vehicle to revitalize the middle class. When President Reagan cut income taxes in the 1980s, the economic results were astonishing, to say the least. There was a 40% drop in unemployment, 20 million new jobs were created, and the median income families saw their net worth jump almost 26%. These are the same kind of economic results I'm striving for with this cut. So, as unemployment drops and private sector investment increases, America will see a corporation-driven revitalization of the middle class.
Your plan sounds valid theoretically. However, pundits may argue that a decrease in the corporate income tax rate leads to decreased tax revenues and a widening budget deficit. Is there any truth to that argument?
Okay, let's break that down into its two parts. During the 1980s, when the late President Reagan cut corporate income taxes similarly, we saw a budget deficit jump of almost 60%, much of which was driven by the need for increased military spending. During that same period, corporate income tax revenues rose approximately 46%, despite having a lower statutory corporate income tax rate. I'm going to use the lower corporate income tax rates to drive more revenue and as a primary tool in decreasing the budget deficit we currently face.
Would these tax increases that you are proposing be permanent or rather reflect the current precarious state of the budget deficit?
Well, as you know, Pat, I'm a CPA and a business consultant by trade, and the trend of outlays exceeding inlays ends with my tenure. I plan to make these tax increases permanent for a number of reasons. Number one, we absolutely must get the budget deficit under control, and increase tax revenue is the easiest way to do that. I believe it axiomatic that all Americans want our country to lead, not follow, to prosper, and not suffer. For this to be a reality, those currently prospering in the present will have to sacrifice.
Have your advisors given consideration to the Keynesian model in regards to the effects of increased income taxes on economic growth?
Absolutely. The Keynesian model macroeconomics tells us that increased taxation acts as something of a bucket of water on the fire that is our economy. However, as we've previously discussed, increased tax revenues is a must for the precarious state of the U.S. budget deficit. So, by cutting the corporate income tax rate, I believe that the business and investment activity as a result will far outrun the negative macroeconomic effects of increased taxation.
Do you truly believe that your plan is strong enough to lead America back to prosperity?
Absolutely, Mr. Ray. I'm an American citizen first and foremost, and I take great pride in being a member of this country. At the same time, I know there are difficult yet necessary changes that have to be made in order to steer our country away from the looming fiscal cliff. I look forward to having the next 4 years to guide this country towards fiscal responsibility and unabated prosperity.
Thanks for meeting with me.
It's a pleasure meeting with you.
Yeah, good luck.
Thank you.